All right, guys. What is going on? What is good? What is good? Are y'all ready to learn something today? Test. Okay. I gotta get better with these transitions. Well, okay. I think we're ready. Chat. Can you guys see in here and drop a 1 real quick? Audio visual check real quick. Drop a 1 if you guys can see and hear. That would be greatly appreciated while I finish my breakfast. All right, appreciate that. What's good? 2020, Jorks, Pop, Willow, Eric, Capitalist, Eberneth, H, Scott. Slowly, Mark, Torty. Did you guys have a good weekend? Yes or no? Yes or no? Did you guys have a good weekend? What's good, Julius? You guys said, yeah. It's cold here in Houston, dude. It is now. Like 49. 49. Not bad. You know, I must say, I gotta tell you, man. Grass-fed ground beef, 85.15. Oh, phenomenal. Oh, even got her car towed. No. You probably wouldn't be able to tow my car. I have a remote start. I'll just turn it on. I don't think they can legally drive if the car is on. I don't know. That I'd probably shoot them. So we'll see how much they love their job. You know what I'm saying? In theory, of course. Went on a hike Saturday. Lovely weather out in Arizona. Very nice. It was good. Ferrero Rocher. Ground beef and eggs. Oh yes. Eggs are for the razzle dazzle, dude. And avocado. You get a ribeye, organic eggs, organic avocado. Man. And a white monster. Oh. Man, what is better than that, dog? Besides a Wick entry, of course. What can be better than that? Let's go, Marshall. Wild that you have pulling up legally stealing your cars over there. You know what's interesting? And I'll get into the business today, of course. But you know what I found interesting is there was a guy. He either made a video or I saw it in a comment. And his response was that as a driver, like a repo man, he gets paid $300 per car from the bank to do that. Now, to be fair, that's not bad. I mean, if you know where the car is at, you go pick it up, bring it to the bank, take what, an hour, 2 hours, and make $300. That's not bad. But you're a straight bitch for taking people's cars, though. I'm sorry. That is such a bitch job. You are a piece of shit. If that is your job, I'm sorry. If you're a repo man, you're an asshole, and I hope you stub your toe 1,000 times. I hope you get a paper cut every time you touch a piece of paper. I hope they fuck up your order every time you go to McDonald's. Every time. I hope you ask for no tomatoes and they give you extra tomatoes. Hey, look, Chad, all money ain't good money, okay? There's your first lesson for today. All money ain't good money, chat. All trades aren't good trades, you know what I'm saying? This is gross to me. We need to, like, really take off if we're going to go higher. I think, at least. He said, your whole country's a scam. Look, I ain't going to argue it. I ain't going to argue it. Our founding fathers would be perplexed if they saw today. They would be perplexed. All of them, even Roosevelt. Well, I'm sorry, founding fathers and presidents, I meant. But like Benjamin Franklin, especially Lincoln, Roosevelt, Teddy Roosevelt, they would all be like, what the fuck, man? Is it rollover week? Yes, it is. Yes, it is. That's why I posted that in the Discord. That's the only time I look at volume, by the way. It's for contract rollovers. It's when the best time to roll over is basically today, but it's really official. The way that I learned it is when the contract, right? Meaning the June contract, because right now we're still in March. So the June contract will take over basically when both volume and open interest are larger than the current contract. So like June volume and open interest will be larger than March. We don't have that right now. Usually occurs like on a Tuesday, Wednesday, but officially it's going to be on Friday, I believe. The third Friday. So all right, we'll leave it here for a minute. And okay, so I forgot who it was in the Discord. You asked like 17 things. Bro made bullet points, which is crazy. I don't mind you asking questions, but like, dude, we gotta relax, man. Would you consider making a video about something like, and they listed 5 bullet points, examples of being wrong, getting caught on the wrong side of the market, being proven wrong, switching bias after being wrong, law 7 question mark, and then the 5th one was real-time changing market conditions, quote, that's not an apostrophe. I don't know what that is. It's the anyway, when Price pulls the Uno reverse card, like thinking the low that it was set like on Friday, but Price decides to visit it again after manipulating highs. So that's a lot of stuff, okay? That's a lot of stuff. And I'll cover a few of those things. All those answers exist on the channel, just got to find them. Yeah, I agree. I agree. Sounds like a good scavenger hunt. I mean, to be fair, 1,200 videos and most of the live streams are an hour a piece. I don't think anybody's going to ever catch up. You know, but that's okay. I'll cover a few things again and again. The same way I tell you guys to read over and over again, but you just don't listen to me. You just give me the middle finger every time. When the market catches you with your hands in the cookie jar. That's a good comment, Willow. Anyone can get everything they need from just the heavy hitters playlist. It's almost like I named that for a reason. 48 Laws Mindset Masterclass in the MMXM Masterclass. Boom. Gucci. Been watching streams from all the way back to sniping in my underpants. Oh yeah. What was it? You don't need a ghillie suit when you can snipe in your underwear. Dude, I'm telling you, man. I am telling you. Nobody has better stream titles than me. Period. Period. Point blank. I don't care. I don't care. I have the best stream titles in all of YouTube and everything everywhere else. You will not find better titles. Sorry. Won't happen. All right. Anyways, enough of my tomfoolery. When the market catches you with your hands in a cookie jar, so here are some main points. You're either onside or offside. Okay? You're either onside or offside. Like, for example, if you shorted that low and the market went higher, you are offside. If you're short and the market goes up, you're offside. If you short and the market goes down, you are onside. Okay? It's very similar to sports. Right? In I don't know too much about soccer, but you can correct me if I'm wrong, but I think in soccer all of the players can't just go to the other side. I think there's a few that have to stay on their half without going to the other side. I think that's correct. But anyway, at least in American football, for example, you have two teams that line up. The linemen line up at the line of scrimmage, right? The receivers at the line of scrimmage, the cornerbacks at the line of scrimmage, you know, few yards here or there, whatever. But all in all, you cannot be offside when the play starts. If the play starts and someone's offside, the refs will blow the whistle. Whoever was offside gets a penalty, 5 yards, 10 yards, redo first, redo second, or whatever. XYZ. There's a small punishment to that. Right? Sometimes a team will line up, they'll see that they're offside and go, uh-oh, let me get onside real quick before the play starts, because as soon as the ball is snapped, that's when it counts, right? So in trading, it's kind of a similar fashion. If you are offside, you will get punished for that. You will take drawdown, you're going to take a loss, you know, what have you. If you are onside, the market will reward you. Okay? So that's it. It's either you're onside or you're offside. The goal is quality trades, not quantity of trades. Okay? Sometimes it's better to just take one really good trade than it is to take 5, 10 mediocre trades, especially break-even trades, right? So the goal is not quantity, the goal is quality. Okay? Quality, not quantity. Number 3, and we're going to get I'm going to give you more bullet points, of course, but number 3, when you are offside, don't take it personally. All right. When you're offside, don't take it personally. Nobody's perfect. We all make mistakes. At some point or another, you're going to get it wrong. You're going to take a losing trade. You're going to buy it, it's going to go lower, or you're going to short it, it's going to go higher. Like, it's statistically impossible to just win 100% of the time. Okay? So, if we know that, I know I covered this a lot last week, right? Especially on that question that I got from, or that I saw on Twitter that I just wanted to answer here and on X as well. And I talked a lot about identity, right? So just because you take a losing trade, that doesn't mean you're a loser, right? Or even like 2 or 3 losing trades in a row. It doesn't mean you're a failure. Hey, look, if you blow an account, you blow a combine or something, hey, yeah, that's a short-term failure for sure. But who was it? Zig Ziglar, who said failure is an event, not a person. Dude, I just started reading Zig Ziglar like a few days ago. Matter of fact, let me pause real quick. Story time. I'll keep it brief. I was in the coffee shop the other day Sugar-Free Sunrise, phenomenal. But I'm reading See You at the Top by Zig Ziglar, but I had taken the dust jacket off because when I hold books and it slips, like the dust jacket, I just toss it. And anyway, this guy walks in and he's like super confident, probably a little bit older than I am, and he's like walking towards the counter and he looks at my book and he's like, "That's a good book." And it was a cool dude. But anyway, yeah, it's called See You at the Top. You got signed copies of See You at the Top? Dude. I try not to be jealous and then you say shit like that. I try to be content and then you say shit like that, dude. Well, you know what? I met John Maxwell back in December. How about that? How about that, Willow? Can I one up you? Shit. You guys just look for ways to screw up my whole day. I don't know why you guys do that. You're like, man, John's having such a good day, I'm about to ruin it. I don't get it, man. I don't get it. They're my pops, not mine. Oh, just take it. Just go steal it. Yeah, but your pops is a top G. Anyway, failure is an event. To quote Zig Ziglar again, failure is an event, not a person. So I think the mistake is when we take that failure and turn it into a person. Meaning you failed at one thing or another, or maybe a couple times, and then you take that on as your identity. That's what's toxic. That's what gets traders into trouble. Okay? I hear you, Will. I hear you. Your attitude, not your aptitude, will determine your altitude. Yeah, that's something. That sounds like something he would say. Him or John Maxwell or maybe Brian Tracy. Out of all like the 70s and 80s gurus, I don't really think I've listened to Brian Tracy as much as anybody else. I've listened to John Maxwell more than anybody ever. But you know what's crazy? Sorry, I know I said we'll get back to it, and I obviously lied to you. What's interesting about Zig Ziglar is I can just see the overlap between him and Maxwell. I'm like, I can see how they're friends. I can see exactly why Maxwell has quoted Ziglar, many times throughout his works. I can just see they're obviously different, but they're almost the same in so many ways. It's really neat, actually. It really is. Yeah, I never really listened to Bob Proctor. I've always heard good things about Bob. I mean, I've listened to a couple like clips here and there, but I don't know, man. I just, again, I don't mean to be disrespectful if Bob is your guy, but I just feel like Bob Proctor really leans into a lot of the pseudoscience. Him and Joe Dispenza. That stuff's just not for me, Jet. It's just not. Oh, vibrations, like that Squidward meme, he's dancing and shit. Like, it's just not my thing. You know what I mean? Law of attraction, I believe, is 100% dog shit. Sorry. Again, it's just not my thing. It might be your thing. You might like it. I'm not going to tell you differently. I just think law of attraction is bullshit. Okay? Law of attraction, supply and demand makes no difference to me. They're in the same bucket. That's just my opinion. I'm just the guy. I just have opinions. Those are mine. So, I mean, we don't really, this whole idea of like you attract what you are. I've never cheated on a woman ever, but yet I got cheated on. So that right there, should tell you, you don't always attract what you are. But statements like that don't sell books. You can't say Well, you usually or are most likely to attract what you are. That doesn't sound right. It's not a one-liner. It's not a little jab. It's not an elevator pitch, right? It's like this long run-on sentence. It doesn't sound good. So it doesn't sell. So they have to make it sound good. And then you use a blanket statement. Doesn't work. Yeah, see, that's what I'm saying. I'm a good person. All my exes were idiots. Yeah, see, you get it. You get it. You get it. Okay. You know, I'm going to have to turn the chat off. That's what it is. I can't focus, man. I tell you guys not to multitask, and this is exactly why. I'm over here trying to give a lesson, and we're over here being nonsensical. Well, yeah, so that's scientifically proven, and it's in the Bible as well. Iron sharpens iron. You become like the 5 people you surround yourself with. That's been proven. But see, chat, that's my point though, is, and Ryan Holiday does this too. I said this on Friday. A lot of authors or, you know, teachers, gurus, whatever, they essentially borrow credibility from other sources, like the Bible, for example. They might quote a Bible verse, and that verse specifically happens to, you know, I guess give validity to what their subject is, but a lot of people don't understand that that verse has been taken out of context. So what they're doing is stealing credibility, and you would not know otherwise if you didn't know that particular source. It's like when you guys share Marcus Aurelius quotes and they're fake, and I comment and I go, that's a fake quote. Well, I don't care. It's a good quote. Well, you should care, you fucking idiot. You haven't read Meditations. You wouldn't know. How about you go read a book and stop reposting? How about that? You know what I'm saying? It annoys me when people post fake quotes. It's like, they never said that. You know, you want me to get on your nerves today? I'll give you another one. You want this? Shit, I forgot his name. The Rockefeller fellow. I don't want a nation of thinkers. I want a nation of workers. Who was that? J.D. Rockefeller? It wasn't. JD. I'm thinking of JD Vance. Oh, yeah. No, it is JD. John D. Rockefeller. Yeah, he never said that. He never said, I want a nation of workers, not thinkers. That was, I forget the guy's name because it's a weird ass name, but it was one of his advisors that said that, not him. Right? That quote gets misattributed to him all the time. That's why you don't listen to TikTok. That's why you don't listen to YouTube Shorts and Instagram Reels. Yes, I post them, but I post anywhere from like 1 to 3 minutes because it gives you information and context. It gives you more of a fuller story than a fake quote. That's all I'm saying. That's all I'm saying, chat. Yeah, see, capitalist, that's what you guys do, man. You get me started, and then the lesson that I have for you just gets tossed out of the window. All right, let's start over. When the market catches you with your hands in a cookie jar, you're either onside or offside. The goal is quality trades, not quantity of trades. When you're offside, don't take it personally. Now, what can you do? You can either realign or stay out until it's clear to you, which means you can either switch your bias. So I'll give you an example of what that looks like. I'm trying not to show you the markups just yet. I guess it's time now. Chat. One of you asked me, what did I think about the market today? And I pointed out, I said, we have a small time frame set of highs, but like, that's it. Like, that's it. So what happens here? we at 9:50, right? That's weird. Is that weird ass time again, right? We take equities open low. We rallied up into the consolidation, right? So guess what? If you're trying to long to go higher, right, and it's not going to those highs, okay, what happens right here at 1040? We trade lower. We get through this up candle here, right? So remember, if you guys know, and if you don't know, now you know. It's this one. Remember? Remember this? It always comes back to this, doesn't it, chat? An original consolidation, when we leave it, if we get back into it, right? If we fail to get above highs, what does that mean? Bearish until manipulation, right? Oh, bearish until what? Oh, manipulation. Oh, that's interesting. That's interesting, isn't it? Oh, yeah, he says that all the time. Well, not all the time, but like the last 2 to 3 weeks, I've been saying that all the time. Okay, if we can't get above highs, right, we're still in the distribution side of the buy model, which means we might go for those highs, but we're not going to do that without taking out a low first. So we traded, see, look at that. Look at that right there, bang. This consolidation here. My mouse betrays me every time, without fail. Original consolidation, we get into it, can't get through it. Shift and stay delivery, bang, look at that. Cut that candle in half, okay? That's some real supply and demand shit. Real supply and demand shit right here. Bang, lower, rallies up, 2 imbalances, can't get past the lower one, bang, right for the low. If you're trying to long, and then you see, oh, wait a minute, down candles aren't being supported, right? Again, real support and resistance. Watch this. That down candle saw a, well, somewhat of a reaction, right? In the short term, it rallied, then it got traded through. What does that up candle become? I told you every concept has an inversion, right? What was once bullish becomes bearish. Oh, look at that. Look at that. Magical indicators, baby. Magical indicators. You like that? So again, my point is, if you thought the low was set and you're long or you're trying to add on or whatever, and then the market does some shit like this, may not be bullish. It might be bearish until manipulation. Now, it could continue lower after that. I'm not always trying to pick the low of the day or, you know, something to that effect. But who's to say you can't long and then maybe take a break even and then switch to go short to go lower? Who says you can't do that? Or you don't even you can just take the break even or take a small loss and then just wait. Oh, manipulation, last imbalance gets traded through. Oh, we could long that for those highs. That's a low risk, high reward setup. And then the market does this gobbledygook candle. And then now we're here. So this is why I said earlier at the beginning of the stream, like if we're going to go higher, I think we should take off. I don't think we should sit here and fiddle fart around like you guys do in my chat. But this is where we're at. This is where we're at. So I think today is rather not great. I think it's generally sloppy. But this is what is taking place. So we gapped higher, much higher than Friday's close. Immediately into the gap. Into it again to take out that low. And then into it again at 11:20, 11:30 almost right here. And you'll notice right there. Okay. You want some more supply and demand concepts? Why does the market stop right there below this low? Why does it do that? Why does it do that? I don't know, chat. It's all random. It's all random. It's all random. See this gap here? Now this is drawn from the daily, so the lines on a smaller time frame are going to be like cooked right here. But do you see that? Look at that. Market respects it. Well, not until there. But we cannot get past the high end. Even here, can't get past the high end. Massive, massive discount here. We get to the upper end. Now we are at the lower end again. So it's basically like a reclaimed gap, Sunday gap, whatever gap that is on a daily time frame. So that's interesting, right? I mean, do you guys not agree? Like, seriously, drop a 2 in the chat if you guys agree that that is damn interesting. That we just so happen to pause and turn. Now, mind you, it only, you know, I mean, it didn't rally a lot. 20 points, it's over $1,000 a contract, though, for the E-mini side. That's interesting to me. Interesting. We just so happen that it's that right there, 66.85 and a half, which is that gap on the daily below that low. Okay, we could still make a new low of day. I think I just don't like this very much. But this is where we're at and what is taking place. So that's why that question mark is here. Like, is this inversion? When we were inside of it, I put that question in there like, okay, what are we going to do here? And then we had our 1150 move here to 1210 here. So we had a little move, but again, this just, I just don't like it. I got some more points for you. Banks, funds, institutions, etc. How is it possible only one entity runs the algo? So the algorithm is not ran by an entity. It's not ran by Citibank or JP Morgan or Wells Fargo. They're ass. They're trash. Okay. They're out here like bullshitting. From what I understand, okay, from what I understand, it's the algorithm, like the algorithm, okay, is coded to do things. Function of mitigation, right? Price seeks inefficiency and levels of liquidity, yada, yada. It references time and price and all that. It is a program, basically. That's why we call it a sell program or a buy program. It's not ran by any of those people. Do some research on BlackRock's supercomputer Aladdin. If there's one central entity running all of it, it'll be that. BlackRock have a majority stake in 87% of the S&P. Again, this is what I believe. Okay, I believe that BlackRock, Citibank, so on and so forth, all of the institutions, they build their own trading algorithms around this type of information, around the price delivery algorithm. So, and again, this stuff is subjective. It's subjective, okay? You can't really go and like verify this. There's nobody that I can call. I'm not calling Jerome Powell or Trump or nobody. Like, you cannot verify this. So you can agree, you can disagree, you can say I'm full of shit. You can say, well, you know, he tweets at the high and tweets at the low, so I don't know. Maybe he knows a few things. But this is the way that I know it, okay? That again, there are institutional algorithms that trade, high frequency trading algorithms, and this is what they're doing. They are loading like shorts on stuff like this, and then they're getting out below lows and getting out below lows. Algorithms are doing that too. High frequency, they'll short that and then probably get out a new low and a new low here, right? So it's a constant like barrage of shorting and covering and shorting and covering and buying highs here, getting out, right? Or rebuying this and imbalance there. You remember last week I talked about a Christmas tree? And I told you how if you were in here shorting at the highs and buying at the low, or covering at the lows and then buying at the lows and getting out at the highs, I told you that your chart would look like a Christmas tree. Where do you think I get this shit from? Where do you think I get these ideas from? You think I just make shit up? You think I just make shit up, chat? Again, this is the way that I know it. I could be wrong. Seriously, I could be wrong. There may not be a one all, end all, be all, Illuminati, third eye algorithm that controls price. That might not even be the case, but that is what I believe. And when you see stuff like this, when you see stuff like this, when you see stuff like this, it really starts to chip away at these common themes among the internet, among, retail trading with the trend lines and moving averages and all this stuff. You know what I'm saying? Again, it's like I give you the proof that I have. You know what I'm saying? And it's not 100% proof. But when you study price and the level of precision in market movements, meaning like even down here, right? The low end of that old gap happens to be below, this low and below equities open, right? And price is responsive. Inversion, price is responsive. It becomes harder and harder to deny. And that's why I keep making fun of the whole indicator and supply and demand crowd, because they believe in what they believe. But precision is what I believe in. Why would you not? That's my question. So hopefully that gives you insight. Again, just to wrap this up, it's not one algorithm that owns, and moves every single market. It's not one algorithm that controls the euro and then British pound and then ES and NQ and all this shit. From what I understand, it's one algorithm for each asset. It's like NQ has one, ES has one, euro has one, gold has one, so on and so forth. I think having one machine to move everything. I mean, think about it. We're talking about thousands and thousands and thousands of assets. I don't even know if something like that could be created. But I know having a price delivery mechanism for one, that seems more likely. Okay? So, you can believe, at the end of the day, you can believe in whatever you want. You can believe in whatever you want. Some people believe in the flying spaghetti monster. Some people believe in Muhammad. Some people believe in Jesus. Some people believe in supply and demand. You're a human. You have free will. Choose whatever you want. Choose whatever you'd like, my friends. All right, let me get back to it, please, because this is like the 17th time we've gone off topic today. What did I leave off with? When you're offside, don't take it personally. Either realign or stay out until it's clear to you. Number 4, being offside means one of two things, most likely. Either a misinterpretation or you mistimed it. So let me go over this real quick. So a misinterpretation it means you got it wrong. You were bullish, it went lower. You were bearish, it went higher. Or you were bullish or bearish and it went sideways, right? It means you got it wrong. So why did you get it wrong? That could be an infinite number of things. I've listed a few. It could be that you skipped top-down analysis. Maybe you didn't look at a daily or a weekly time frame and you didn't realize you were shorting in a bullish imbalance on the daily time frame or something like that. It could mean a rushed analysis. You didn't actually spend time on the various time frames and you just rushed it. I've done that. Well, every mistake you know of, I've done. That's why I know all this shit. A misinterpretation could be because you forced setups that weren't there, right? These setups are not copy and paste, cookie cutter. They're not just, well, this is a low, high, lower, low formation, so that makes this a mitigation. That doesn't mean that at all. That doesn't mean that at all. You can't just copy and paste, you know, setups and then put them wherever you want on the chart. I mean, you could do that, but you're going to get it wrong, because if this market really is bearish, then something like this is not going to hold. Okay, so it's not that simple. It's not that easy. And the fourth one that I will cover today is no intermarket analysis. You know, maybe you're trying to long indices and the dollar is super bullish. And maybe with the dollar being bullish might mean a weaker indices, right? But you didn't look at the dollar index. You didn't bother doing intermarket, right? So doing any of those things could be a misinterpretation of price. If you're super busy looking at indicators, you're looking at, you know, VWAP or MACD or something, you know, that could be a misinterpretation, because you're looking at an indicator, which is an interpretation of whatever time frame that indicator is looking at, right? The map is not the territory. So you might be looking at a small piece of information, but not looking at the big picture. And if you might be, let's say, on-site on a small time frame, but if you're off-site on a larger time frame, that small time frame is going to wreck you. Okay. So again, being offside means you either have a misinterpretation, you got it wrong, or number two, maybe you mistimed it. So maybe you got the wrong time. Maybe you didn't slap it to a macro. Maybe you didn't slap it to an hourly chart. Maybe day of week, you know, maybe like today's Monday, for example, right? So Tuesday, tomorrow, you know, there's a good chance tomorrow may do something like trade below previous day's low and then go higher, or trade above previous day high and go lower, or something like that. But if you don't know, or if you don't take into consideration the day of the week phenomenon, you might mistime something like that. You know, you were trying to long, but you didn't wait for Tuesday to take Monday's low or something. You see what I'm saying? Can you guys drop a 3 in the chat if you understand what I'm saying? We got 70 people on here. Finally starting to get some more viewers up in here. That's crazy. The numbers bump up after you start talking shit. That's crazy. This is what it takes, chat. That's what it takes. That's what it takes, chat. My goodness gracious. That's wild. All right, so there it is. Being offside means either a misinterpretation or you mistimed it, or some other thing that I can't think of off the top of my head, because I wrote all this down before like 20 minutes before we started. All right, I'm gonna reference the How to Trade Without Fear video. I'll give you 3 points from that video. How to trade without fear. So number 1 is small risk per trade. You shouldn't be scared if your risk is small. If you have 1% risk and you're scared, you probably have an identity issue, because you're trying to not lose. So number 1, how to trade without fear, is small risk per trade. And then number 2 is a max daily loss. max daily loss. We have a max daily loss and a weekly loss as well, because that prevents catastrophic, 10%, 20%, or, whatever else, wrecking a combine or wrecking a challenge, or I don't know, maybe you have a $500 account and you wreck $300 out of it or something. Like that's bad, and those two things prevent that, or at least prevent that very quickly. So number 1 and 2 was small risk per trade and max daily loss. Number 3 is trade with a proven strategy, right? So this by itself isn't necessarily a strategy. This is a framework, okay? This is a framework for how the markets move. It won't always be this clean. Sometimes you may have, sometimes you may not even have a reversal here. It might just continue and keep going and keep going. Or maybe you might think, well, this is the manipulation phase and now we might reverse here and it keeps going lower for something on a higher time frame that you missed. It won't always be like this to the T, but generally speaking, this is how markets book, at least on the buy side when we're in a buy program. Okay. But you can have a model at the low. You can have a model right after the low. You can have a model in the bottom half of the 50%. You can have of the discount range. You can have a model that's in the upper half of the 50% range. You can have a model based on inversions or reaccumulations. There's all types of models that you can frame around the market maker model framework. Okay? Because that stuff is proven. It's proven. How many years have you been with me? How many times have you seen equal highs get wrecked after the market makes a low and then runs for the high? Or we have equal lows, the market wrecks a high and then dumps for the lows. How many times have you seen that? You've seen that it's proven, right? And then number 4, it's not like in the video. I left out some of the stuff. I want you to go watch the video. But the 4th point that I have for you is the series of trades perspective. You might not win this trade or the next one or the one after that. You never know. In a series of 20, 30, 100 trades, none of us have any idea with a high degree of accuracy on which trades are going to be losers and winners. We just don't. I learned that from Mark Douglas, right? / Paula Webb, Trading in the Zone, Disciplined Trader. How to trade or how to think like a professional trader. There's a series on YouTube somewhere, right? We don't know. We don't know. Right, Willow? That's why we did the coin flip challenge. If you guys don't know what that is, you flip a coin 100 times. Did we do 50 or 100? I think we did 100. You flip a coin 100 times. You start with 0 and you add $2 for heads, or you subtract $1 for tails. So heads is +2, tails is -1. And you did 100 flip. We all did 100 flips. You could do this in ChatGPT if you wanted to, by the way. I think you should do it manually, but I know some of you are like, fuck all that. But you can do that. How many of you, based on that coin flip, actually had a negative account? I don't think anybody did. I don't think anybody posted that they had a negative account balance at the end of the 100th flip. Every account was positive, right? And everybody saw their own winning streaks. They saw their own losing streaks. They saw periods where it wasn't really doing anything, right? A couple 2s and 1s, and didn't do a lot. But in the overall, every time after 100, it was positive. Every time. Because that's just basic math, I guess. It's risk management, keeping your losses small and your wins bigger, even at 2 times. You know what I mean? So you could be a 50% win rate trader, but as long as your wins are twice your losses, that's profitability. It ain't going to be the sexiest equity curve, but it's profitability. All right, so the last thing is record and reflect. All right, record and reflect. What was your trade idea? What was your entry, stop loss, TP? What was the outcome of that? What did you miss? What did you get wrong? Okay, and I didn't have time to write any more stuff down. We had to start the stream, but I think you get the gist of it, right? That's why I keep telling you, you need to have a trading journal. You need to have a trading binder. You need to print off charts. Even if you don't print them off, at least save them in a document somewhere or a folder somewhere on your computer. I mean, at least do that. Okay? So then you can see what you get wrong. Well, you know, John, I constantly get stopped out at the low and then the market goes my direction. Right. That means you're doing something wrong. So if you're constantly getting stopped out at the low, you need to wait for that low to be set and then play the next retracement or the one after that and then get in sync with the market. You're getting in early. You're getting in early. So, you know, either you have impatience or you're just mistiming it. So you need to fix yourself. Right? You see what I'm saying? So that's what we need. We need a cookie emoji. I don't think we have one of those. We don't. Well, I guess drop a Pepe blessed emoji if you guys learned something today, at least. Okay, I'll cover this briefly one more time in case you missed any of the points. When the market catches you with your hands in a cookie jar, you're either onside or offside. The goal is quality trades, not quantity of trades. When offside, don't take it personally. Realign or stay out until it's clear to you. If you are offside, it usually means one of two things. It's a misinterpretation. You got it wrong. No top down, rushed analysis. Maybe you forced a setup that wasn't there, or no intermarket analysis, or, you know, you missed some sort of analysis. Or you misinterpreted it. You thought it was this and it wasn't. Or you mistimed it. Wrong time of day, wrong day of the week, or even the wrong phase of price. I meant to say that earlier. I completely skipped that. Maybe you thought that I don't know. Maybe you thought this was expansion lower met with expansion higher. And so maybe you thought this was a retracement for an extension lower. So then you shorted and now the market's going up a little bit. I don't know. I'm trying to make something up because I don't know what you guys would think. You know, maybe you think this is expansion lower when maybe it's just a retracement to go higher. I don't know. Maybe you just got the wrong phase. We referenced the how to trade without fear video that's on this YouTube channel. We talked about 4 points in that: keeping the risk small per trade and having a max daily loss and weekly loss. And we talked about trading with a proven strategy. I gave you the framework for market maker models. That's not a strategy. It's a framework that you can build strategies around. And we talked about the mindset of having a series of trades perspective. Every trade you take won't be a winner, period. And then we talked briefly on record and reflect. What was the trade? You know, how did you feel about it when you were watching it, whatever? What was the outcome? What did you miss? What did you get wrong? What could you do better next time? Okay? So you can always, you know, if you're bullish and the market's proven otherwise, you can swap your bias. Okay? We're married to the game, not the bias, baby. If you marry a bias and you're wrong, that's when you're going to start doing stuff like trying to long and long and long. And if the market just keep, like, let's go back to Friday for a second. If you tried to long and long and long and long, like, dude, if you tried to repeatedly buy a bearish market, like you cooked yourself. You know what I mean? Like you didn't cook, you got cooked. You know what I'm saying? And that's not good. So you can have a bias, but at the end of the day, what price is doing, that's king. Price is king in the realm of financial markets. Okay? You cannot argue with price. I cannot argue with price. It's 67.02 even. You can't disagree. I can't disagree. It is what it is, right? So listen to this more than anybody else. And time, of course. Time, price, and context. So with that, that's where I'm going to leave it. I have 3 targets. I doubt any of that is going to be met if we really don't start doing something. I mean, it's already 1 o'clock. I have a target for a new high of day. If we do get that, we may end up taking Friday's high. If we do blast off, we may get 752. 67.52. But if not, we may just make a new low of day or fizzle out. I don't know. I think today sucks overall, personally. Every day of the week has its own like high probability characteristics, but I think some of the best days to trade are Tuesday, Wednesday, and Thursday. So hopefully that helps. Y'all be good. Be blessed. We'll be here same time, same place tomorrow on Tuesday the 17th. So I'll see y'all then.